What if I told you some of the world's biggest banks make billions, without lending money the way you think? Most people think banks only earn from loans, but investment banks play an entirely different game. Some investment banks earn millions from a single deal, even if they never own the company. So where does all that money actually come from? The answer is far more surprising than most people realize.
Stay until the end, because once you understand this hidden system, you'll never look at Wall Street the same way again.
Meet Jake, a software engineer with a great salary. He reads that a company raised $5 billion. His question is, who made that? The answer isn't the CEO, and it isn't the government. Behind the scenes, an investment bank quietly organizes the entire. Think of an investment bank like a professional matchmaker. It connects businesses with investors who have money to invest. Imagine you built an amazing company, but expanding it would cost billions, dollars you simply don't have. That's when the investment bank steps in with a plan that can turn a growing company into a global giant.
Imagine your company is worth billions on paper, but most of that wealth is locked inside. To keep growing, you need cash.
Instead of borrowing huge loans, the company sells tiny ownership pieces. That's called an IPO, or initial public offering. Think of it like cutting a giant pizza into thousands of slices. Each slice represents a small piece of the company that investors can buy. But selling millions of shares isn't easy. Someone has to find buyers, set a fair price, and earn investors' trust. That's where investment banks shine. They guide the company, connect it with investors, help determine a reasonable price, and coordinate the offering. But taking companies public is only one part of the business. Some of the biggest paychecks come from company acquisitions. Imagine a fast-growing tech company wants to buy a smaller startup. Instead of building everything from scratch. Sounds simple, until you realize the deal could be worth billions, with lawyers, accountants, investors, and regulators all involved. That's why companies hire investment banks to value the business, negotiate terms, organize the paperwork, and help guide the deal from start to finish. If the acquisition succeeds, the bank receives a professional advisory fee. On large transactions, those fees can be substantial but IPOs and company deals aren't the only way investment banks make money. Every single trading day, another massive business is running. Imagine thousands of investors trying to buy and sell stocks at the exact same moment. Without enough buyers and sellers, the market could. This is where many investment banks act as market makers. Their job is to help keep trading moving by standing ready to buy from sellers, and instead of waiting for the perfect match every time, the bank helps provide liquidity, making it easier for people to trade.
Investment banks earn revenue by facilitating trades and managing risk. They help markets function smoothly.
But here's something that surprises people. Some investment banks invest their own money, hoping those investments grow. Imagine planting seeds in different gardens. Some grow into huge trees, while others never grow at all. Investing works in a similar way. That's why professional teams spend months researching businesses before investing. They study finances, competition, risks, and future growth potential. Even after research, there's no guaranteed outcome. Markets can change, and economies can slow down. Unexpected events affect investments. That's why successful investment banks don't rely on just one source of income. They build multiple businesses, so one strong area can help balance. Money can be replaced, buildings can be rebuilt. But if an investment bank loses trust, rebuilding its reputation can take years. Imagine asking thousands of people to hand you their money. They will only do it if they believe you're responsible, transparent, and reliable. That's why investment banks spend effort managing risk. Every major decision is reviewed, tested, and questioned before billions of dollars.
Even with careful planning, no financial institution can eliminate every risk. Markets react to unexpected events, economic.
History has shown that when confidence disappears, even big financial institutions face challenges. That's why trust and risk management remain.
So why do some investment bankers earn bonuses that are larger than most people's lifetime savings? The answer isn't magic, it's the value.
Imagine helping two companies complete a deal worth $10 billion. Even a small advisory fee can represent a significant amount. Because behind every major deal are months of research, financial analysis, negotiations. The announcement is only the tip of the iceberg. That doesn't mean every investment banker becomes wealthy. Success depends on experience, performance, responsibility, and the type of work they. In the end, investment banks aren't paid simply for moving money. They're paid for solving complex financial problems that businesses often can't solve alone. Here's one of the biggest misconceptions in finance. Many people think investment banks and regular banks are basically the same. They're not. Commercial banks focus on everyday banking. They offer checking, savings, cards, and loans. They support both individuals and businesses. An investment bank works differently. Its clients are often corporations, institutional investors, and governments looking for complex. Think of it this way. One bank helps people manage their personal money. The other helps organizations raise capital, complete major transactions, and different missions, different clients, different expertise. That's why the word bank can describe two businesses that operate in very different ways. You may never negotiate a billion-dollar merger, but understanding how investment banks work can still make you a smarter investor and a more informed decision maker. The next time you hear about an IPO, a merger, or a company raising billions of dollars, you'll know there's usually an investment bank working quietly behind the scenes.
The biggest lesson isn't about billion-dollar deals. It's about solving problems, building trust, and creating opportunities that help businesses grow.
Whether you're investing for retirement, building a business, or simply learning about money, understanding the financial system helps you make better decisions. Because in the end, money isn't just about numbers. It's about understanding the system well enough to make smarter choices throughout your life. Here's something most people never notice. Investment banks rarely build the products you use every day. Yet they often help those companies grow, and they don't invent the breakthrough product. Instead, they help businesses find funding to build factories, hire employees, or pursue major. No institution succeeds all the time. Every transaction carries risk, which is why careful planning matters. The takeaway isn't just how much money investment banks make. It's understanding how capital, trust, and smart decisions help economies grow. Now, the next time you hear about a billion-dollar IPO, a corporate merger, or a company raising capital, you'll understand the hidden financial system. Let's put everything together. Investment banks don't become successful by simply holding money. They create value by connecting people. They help companies raise capital, advise on major acquisitions, support financial markets, and manage complex transactions. Every deal depends on preparation, research, teamwork, and trust. Those are the real assets behind major financial transaction.
And remember, investing involves risk. That's why learning is more valuable than chasing quick profits.
The more you understand money, the less intimidating financial news becomes, and the more confident you'll feel making your own decisions.
Today, you discovered that investment banks are places where money moves. They help businesses grow and markets function.
Every financial headline now tells a bigger story, one about strategy, trust, and the people working behind the scenes. Knowledge won't guarantee success, but it can help you ask better questions, understand opportunities, and avoid common financial mistakes. If this video helped you, see Wall Street from a new perspective. Imagine what you'll learn as you continue exploring how money really works.
Finance isn't magic, it's knowledge and trust. If you enjoyed learning the simple way, subscribe. Keep building your financial future.